Hi, I'm Chris Johnson, Quantitative Analysis Specialist at Money Morning. Here to spend a few minutes with you today talking about Nvidia, one of the hottest stocks on Wall Street. This has been one of the more widely watched stocks over the last few years. Why? It's been up over 260%. That gets a little bit of attention in a market that's been flat to up just historical averages. One of the things that's happened here over the last, let's call it, couple of weeks is we've seen a classic case of buying rumor, selling the news on Nvidia. And when we look at the chart here in a second, we'll see exactly what I'm talking about. When you look back over the last 3 years, Nvidia's got a great history of beating the analyst recommendations for the earnings per share at each one of their earnings announcements. It also has a great reputation for rallying. We saw a rally in November that took the stock 20% higher initially, right after that earnings announcement. What's happened here is that investors have kind of tuned in on this. They want to get in early, so they do what we call a buy the rumor. Right before the last report, we saw the stock go from 102 up to 120. Everybody thought they'd get into the stock early, maybe get into it. They come out with a good earnings report and the stock goes up another 20%. Instead, this turned into what we refer to as a crowded trade, a very dangerous situation. Think of a crowded theater here, where all of a sudden something happens and everybody needs to get out. In this case, it's the earnings. Earnings came out, good expectations, good numbers, everything looked good. But the problem is there's nobody left on the sidelines to buy the stock and drive it higher. So we see a sell the news frenzy. That's what's happened here over the last few weeks with Nvidia and offers an opportunity for traders right now. We've seen the stock move from that 120 level down to 102, and now it's doing a nice little technical dance, we'll call it, above 100. And what I mean by that technical dance is there are a number of technical indicators at that level that are telling us it should hold the stock there and give us an opportunity as we see consolidation. Let's go through a couple of those indicators real quickly. First of all, just a round number. Believe it or not, it's true. The more zeros you have after a number on a stock, the better support or resistance it's going to play. It's a psychological effect for traders, whether it's Dow 10,000, Dow 20,000, or in this case, Nvidia at 100. It's something that we look at and say, okay, if it's at 100, it's going to tend to hold. We saw this happen back in November with Nvidia. We've seen resistance when the stock tried to break above 100, and then once it went above 100, it actually held. Indicator number 2 that I'm watching right now is the RSI. That short-term RSI on Nvidia right now is at oversold levels. This is the first time since January 2016 that we've seen the stock this oversold. What does that mean to somebody who doesn't watch the RSI? What it means is that there is a vacuum now of sellers. So in other words, after that earnings news, everybody got out there, started selling it. There's a finite number of people that want to sell the stock. They're out. So now the stock is left in this vacuum, and it takes fewer buyers to turn it around and get that trend going again. The third and last thing is a little bit further below us, about 6% below the current value, is the 100-day moving average of Nvidia, which is trending higher. That is one of those technical support trend lines that all of the technicians watch, usually the 50, the 100, and the 200-day moving average. Those are your key moving averages. So we've got some support. We're not yet down to that level, but it gives me a little bit of a buffer or a safety zone if I'm thinking about going long Nvidia right now and looking at an opportunity for the bounce. And let's call it exactly that right now. Earnings are out of the way. We know they were good. What's funny is you can buy Nvidia and now know what the earnings were, but you can buy it at the price ahead of earnings. So the secret's already out. You're buying the value of those earnings at the prices that it was at before earnings. Where do I think the stock is going to go from here? What do I see happening? I think this is still a trading opportunity. And let me point out one last thing. Over the last week, we've seen 3 analysts that have downgraded this stock, and they've used the term valuation when they've done that. Now, typically when an analyst downgrades stock based on valuation, it means that it's run too high for them. It's too lofty. They feel that there's no more value in the stock. Value is in the eye of the market, really, in this particular case. There weren't a lot of analysts that were bullish the stock. At the time, when we started to see those downgrades, there were only 67% of the Wall Street analysts that were bullish on the stock. That's a stock that's up more than 200% in 12 months. So there are a lot of people on the sidelines that still want to get into this stock. That's why we think that Nvidia can hold this parabolic rally that they've been on for more than a year. So how do we play this right now? Let's get back to what I'm seeing. With the analyst downgrades out of the way, we'll expect to see a few price upgrades potentially as the dust settles here. Our expectations here over the short term is that we're going to see that 100 level hold on Nvidia, and that the next move is going to be up towards that 110 and even as high as those highs that we saw right before earnings at 120. There's one trend line, and I already mentioned the 50-day moving average, which is one of the most important to the technical traders out there. It sits at 107 or right around 107 right now. A break above this is going to slingshot the stock even higher as we start to see that trend hold even stronger and the technicians get back on board with this stock. So how do I look at it? Well, one, I can go out and buy the stock if I wanted and just try to get a 10, maybe 15% return. Typically, as an options trader, though, I like to try to leverage moves like this that I see, where I believe there's a strong trend in place and a strong likelihood of a bounce. What we've done is we've looked this morning at the options montage on our screens and seen that right now, the March 17, so the March 17 expiration, 105 call is trading right at about $2. Now at $2, this gives us a great opportunity to get into an option that leverages the move, not just from 100, but also maybe up to just 110, breaking above that key 107 level that I mentioned. That also gives us some potential to ride a slingshot even higher. So from our perspective, $2 for this particular option, if we finish just at that 50-day moving average within the next 10 days, we've got profit potential that's somewhere between 25 to 50%. If we get above that 107 level and head towards 110, which is exactly where I think you'll see the stock trading over the intermediate term, that's when we start to get that more, let's say, ripe 50% and higher range in terms of profit potential on that option. The downside right now on Nvidia is that we move down to that 97 level and that 100-day moving average holds, which would give us even more potential for a bounce because the stock would be more oversold at that level. And I think we still see Nvidia work its way back up towards the 105 to 107 within that 3 weeks we have between now and that options expiration. With that, I'm going to end my presentation this morning on Nvidia, and I look forward to seeing you again sometime.